Let's get in our big market voice for this morning. Saurabh Mukherjea needs no introduction, Chief Executive Officer at Ambit Capital. During our launch week, Saurabh, it's a special moment to have you. Thank you so much for joining in.
Congratulations.
Yep, thank you so much for that, Saurabh. Is the market likely to rejoice what is seeming like some green shoots of the economy, or you wouldn't read into these few astray numbers like the CV sales and other indicators as that possible green shoot?
I think the auto sales numbers have been reasonably healthy for a while now. I think a good couple of years. Car sales have been particularly healthy. Good to see motorcycle sales being in reasonably good shape. I think CV sales pickup is a positive portent. The challenge is the welter of negative data just keeps getting bigger by the passing month. So around 8-9 months ago, we were one of the few circumspect voices about the Indian economy. And I think I dare say that our circumspection, our concerns about the economy are increasingly consensus concerns. And to that extent, I think the stock market is sort of beginning to bake in our concerns about the state of the economy, the state of the banking system, and more generally the corporate confidence context, which I think is fairly feeble in India today.
Yeah, so you have outlined these concerns for a while, as you rightly said. Where do we turn around the corner? Your Sensex target is 29,000, which is not too much of a downside. So will the market cap to GDP stay at the levels that it is, or do you believe that GDP growth slowdown could lead the markets to overshoot what you believe is a prudent Sensex target?
I think the overshooting, whether it's in foreign exchange markets or equity markets, seems to be a sort of a factor of life. And I don't think it's that much point in my speculating whether it'll go to 27 or 26 on the Sensex.
Fair call.
I think if you ask, I think the more meaningful question that you've raised is how do we turn things around in India? I think the answers keep going back to the banking system. We have to find a way to repair the broken banking system. You cannot expect to build an economy, an underdeveloped economy like ours, $1,600 per capita income. We can't expect to build an economy like ours with a banking system where credit growth crawls along at 2, 3, 4% year after year. At the moment, the bond market is doing a good job of funding our car sales and our washing machine sales and our home loans. But the bond market is not meant to be the frontline funder of the economy. Last 12 months, the bond markets lent way more money than the banks have. So I think repairing the banking system would be a central issue. The other element which we are hoping to see is the GST teething issues gradually calm down over the next couple of quarters. I think for small businesses especially, the teething problems, the working capital challenges around GST are fairly meaningful. But I think to be fair to the government and to small businesses, that's a function of time. I think there's IT systems issues, there's tax rule issues. Those I think get settled down over 2 quarters. If we can fix the banking system and if the GST issues settle down sooner rather than later, by the end of this year, we might well be turning around a bearish call on the economy.
Talking about fixing the banking system, today has not been a great piece of news, right? RCOM and the fact that SEBI transparency is also, there is a bit of a backstep, Pradeep.
Yeah, definitely. So what's your call on banking sector really? Because this, in spite of all these concerns, people have been finding several stories to bank on. What are you really doing?
Yeah, I think that the corporate life in India dictates that you find silver linings in the darkest of clouds. I think the banking system credit quality issues will worsen in the Q2 results. I don't have that much doubt that the NPA numbers, not just the large corporate NPA issues, which I think we're very familiar with, but I think small and mid corporates now, I think the NPA challenges are mounting there. The PSU banks have been on the firing line. I think the PSU banks will continue to get battered on credit quality again in small and mid corporate. The interesting question is, what about the private sector banks, the NBFCs and the HFCs? We saw in 1Q housing finance companies' credit quality deteriorate quite meaningfully. I reckon that deterioration in credit quality in the housing finance companies continues. I don't think truck finance is in the greatest of shape. The data that we're getting on truckers is volumes, truck freight rates suggest truck finance will continue to weaken. Barring car finance, which I think is one big bright spot in India, thank God for that. Barring car finance, I think we've got credit quality challenges elsewhere.
Okay, so just hold on to that thought. We have 30 seconds or 20 seconds to market open. And let's focus on the wall and try and tell you what the start of the market is likely to be like. We'll have a start in the green for sure, so make no mistake about that. The question is whether we can extend those gains or no. 16 seconds 16 seconds to market open, in fact 12 seconds to market open. And keep in mind, auto sales would be the focus. We will also have Dr. Reddy's and a couple of other stocks be in focus as well. RCom will start off on a negative note, so those are the 2 or 3 key monitorables. But here are the first rates. The Nifty is starting off about 1% higher, 100 points for the index, close to 9,900. The Sensex about 300 points as well, so triple century there as well. And the Bank Nifty, or the Nifty Bank, call it whatever, is about 0.25% or 0.75% in the green. So that's actually pretty good news for the start perspective. The mid-cap and the small-cap indices about 1% higher, so the market bet could be positive. A lot of green on the Nifty heat map, I'm sure of it. Maybe a few stocks in the red. Yep, just 3 stocks in the red. That tells you the story today. We have a big bank start, and autos are leading the way. To an extent, Dr. Reddy's is leading the way. Not too much of an ONGC out there in the top gainers list, lying about 1.5% higher. So not too much, but it's autos that seems to be leading the way in the session today, and not surprised there at all. Let's bring up some individual names and try and talk about those. So exports has improved for Bajaj Auto. I could well say Tata Motors is the big mover, but let's start off with Bajaj Auto. Exports have improved there, and that's led to that stock moving up higher. And remember, this is a stock that's actually had a good uptrend the last few sessions, and it's doing rather well too. Tata Motors 5.5% higher. I don't remember the last time in the last 2 or 3 months or 4 months or maybe longer, but I've seen Tata Motors react with so much gusto. So 5.5% higher for this one. Good CV volumes there. Good CV volumes for Eicher as well, so interesting there. Gas price hike benefits. I think brokerages by and large have said that the improvement to the EPS could be to the tune of 5% about 1% higher for ONGC. It's already baked in some gains in the last week. Keep that in mind. Dr. Reddy's and the new launch, 2.5% higher. Well, we've seen 2 or 3 brokerage notes give target price higher by almost 30%. Today's session about 2% higher. One piece of bad news for companies, but they're not reacting too badly. ATF prices hiked 5.8%. I think Somit was saying that the margin impact could be about 1.5%. No, not a bad reaction. So maybe the market mood taking all of these stocks to marginally higher in trade. Pradeep, what else?
Let's look at Bharat Forge and Ramakrishna Forging. First of all, as we actually thought that, after auto sales numbers, we'll also see a lot of action at these counters. We'll have more auto ancillary companies coming up on our screen as, the trade picks up. But let's look at PNC Infratech. The stock is up 10.5% now. On the back of that huge order they have received, 2,200 crores or so. But there are other infra stocks also in focus today. JP Associates has moved up by roughly 5% or so. You have several other construction and infra stocks like GMR and GVK doing quite well this morning. At least they've had a good start of the day. GVK Power is in fact up by 4.5%. Among others, you have Bombay Dyeing. And then you have metal stocks like Nalco, there is Moil. So these are some of the commodity stocks that have been doing well in trade early in the morning today. Among metal, you also have Jindal Stainless that has opened strong. And infra, you have J Kumar Infra as well. And among NBFCs, I see JM Financials that is up by around 2.5%. So overall, these are some of the sectors driving the market.
Well, so since NBFCs which is moving up, and we'll talk about some of the individual movers as well in a bit, but sort of was speaking about car finance and NBFC, sort of you want to finish that point because that pocket hitherto has shown good growth,
yeah.
And the market is duly rewarded.
Absolutely.
Is there a change around the corner or no, not quite?
I think Q2 will still be healthy. I think numbers on NBFCs will be healthy even in the quarter that we're going to see. Car finance, NBFCs especially. I'm not so sure about CV finance. I think truck finance, there are some issues which are cropping up around both utilization of trucks and freight rates. But both the volume data on cars, as we can see from the auto companies, and the credit quality numbers, I think will be spanking there. The challenge, I think, is on the non-retail side. It's on the commercial side. Commercial is around 60% of loans outstanding in our country. And I think uniformly now, large, mid and SME credit quality is under pressure quarter after quarter. And I think that's going to worry any well-wisher of the Indian economy.
Okay, so what are the other leading indicators that you are tracking or you are picking up? Do you really think that there is probably a need for further stimulus both from RBI and the government?
I think in terms of leading indicators, what's very easy to do, I think, and everybody can access the data. You can see the credit rating agencies' daily rating actions, and I think there's very little doubt that in the last 3 months, the rating actions have decidedly become less favorable. Suspended ratings, downgrades are increasingly growing, which is one of the reasons I suspect why the SEBI circular, which was supposed to go live today, got shelved at the last possible moment. Vis-a-vis stimulus, I'm not sure where the money comes from, because as we saw in the 1Q GDP data, government spending had grown at a frenetic rate, 25-30% growth in government spending. And as we are hearing, by end of August, the government has eaten through 96% of the fiscal deficit. So unless the exchequer is willing to settle for a much bigger budget deficit, difficult to see where the money for the stimulus comes from.
Do you think they'll do that?
My reckoning is, I think if they're going to pull a rabbit out of the hat, it'll have to be on the disinvestment front. They might decide to disinvest something which we're not expecting them to disinvest, and that could give them some extra fiscal firepower. But if they're going to do that, they're going to do that quickly before the window of opportunity shuts on them. Without doing something which is non-linear, which is out of the box, such as a big disinvestment, difficult to see where we get the fiscal firepower to resurrect the economy's fortunes this year.
Okay, let's talk about some of the things that have happened today or over the weekend. One is, I know we spoke about autos, the gas price hike, sort of, and the revision thereof, and that leading to some upsurge in select upstream companies. And we were just discussing in the morning that it's probably meaningful for one ONGC, not so much for some of the others, even for Reliance for that matter. What happens to this upstream space? It's been underperforming for a while, save for Reliance.
I think that the tragedy for us is we quite liked the OMCs. We thought that India was on its way to deregulating the OMC space, and the OMCs had done ever so well. But obviously, as the gas prices, the global Brent price go up, even if the government allows the OMCs to pass on the Brent hike, which I'm pretty sure they will, from a refining margins perspective, there is pressure clearly building up on the OMCs. So it's a little sad, but hey, commodity prices are meant to fluctuate. The bigger issue, I think, is for the fisc, because I think off the top of my head, I think the budget bakes in something around Brent at around 60. And if global crude prices now go significantly north of 60, then I think we've got a fiscal challenge. Remember, there's excise baked into the price. Yeah. So either the government passes on the Brent hike onto the public, or they take a hit to their excise revenues, which in the current fiscal construct appears a little difficult to do. So if the government protects its excise revenues and passes on the entire crude hike to the public, then that'll be laudable at one level. It'll be great to see an Indian government saying, yes, global crude prices are rising, but hey, it's deregulated fuel environment, I'm going to pass it on to you. So I think this is going to be one tricky call over the next couple of weeks for the powers that be in Delhi. Do I take a hit on excise, or do I pass on the entire hike in crude prices onto the public?
There's no question of, and I think the oil minister has ruled it out as well, there's no question of the government trying to regulate oil prices after 2.5, 3 years of going down the path of telling the world amply that, hey, we are deregulating this. So no interference with the OMCs, right?
That's what we are hoping for. But as I said, it'll be very interesting to see what happens here. The excise revenues, I think, are my big concern. I think the fisc is in a tight position, as is evident from the budget deficit data, and I doubt the government will sacrifice its revenues. Therefore, I think we should all brace for significantly higher pump prices of petrol and diesel.
So what happens to interest rate? What do you expect RBI will do tomorrow and in the coming meetings?
Clearly, given the state of the economy, at least one rate cut is warranted over the next 3 to 4 months. Whether it comes tomorrow or not, I don't know. I simply don't know what will happen tomorrow. But at least 25 bips, perhaps even 50 bips is warranted over the next 3 to 4 months, given the state of the economy. Whether it will be tomorrow or not, I don't know.
Was this a change in stance, sort of? I mean, have you...
So we were saying 25 bips further cut this year, but I think given how weak the economic climate is, we've increased the 25 bips to 25 to 50 this fiscal, because I think the economy is far weaker. Or rather, put it like this, the economy has weakened far more sharply in the last 3 months than we thought would happen. For example, the tax collection data for August is stunningly weak. The direct tax collection data, both the income tax and corporate tax, you're down month on month July versus August, you're down year on year, August this year versus August last year. So there is clearly pronounced economic weakness, which I'm sure the RBI will be cognizant of. And therefore our sense is, rather than 25 bips of cuts this year, you're looking at more like 25 to 50. Whether it happens tomorrow, I'm not so sure. If I was the RBI, I would hold the firepower back, because my reckoning is the fisc will get tighter and tighter. Government spending growth will get weaker and weaker as we grow into the second half of the year. And therefore, I as the RBI would rather hold the firepower back rather than blow it out early. But I think the economic weakness point, I don't think there can be any two cases about it. The economy clearly has softened quite quickly in the last 6 months.
So will they be constrained by what's happening to rupee, and how does this weaker rupee really impact the markets, the earnings overall?
I doubt it. I think there's case to believe that the rupee was too strong at 64 odd. The rupee was too strong, so there's good reasons for believing that that not too many people in India will be unhappy with the rupee with a 66 handle on it. I doubt the rupee will be the paramount concern of the central bank at this stage. I think they'll be far more worried about that if we cut prematurely, will we stoke inflation? That's a delicate judgment call. Given that monsoons haven't been great, the Kharif crop has been a little below expectation. I think they'll be worried about will we stoke inflation if we cut prematurely, and that's why maybe they hold off for another month or so before cutting. But very difficult to see how we go through the next 3-4 months without at least one cut, perhaps two.
Okay. One final question from my end. In the 10 interesting things that you read and the note that you put out, the first one that you've spoken about is how entrepreneurs or investors who author or write things should beware of the impact that it could have, anecdotal evidence. Saurabh Mukherjee has written a book as well.
Yeah, so thankfully the book wasn't on me. When I read the book, it was about the legendary hedge fund manager's book, Ray Dalio's book. And I think the point we were making, and it's a Financial Times article, the point we were making is that when you start writing about yourself, you clearly believe what you have to say about yourself is very important. And he was suggesting that the FT point of view, that's the height of hubris. I think we've seen a few examples of that in our country, highly successful CEOs writing about themselves. Thankfully, that's far more common in the States than it is in India as yet.
Yeah, that's interesting.
So one last question, since your fiscal target is 29,000, and that is more or less, not significant downside, but kind of conservative at this point. So do you foresee a meaningful correction here on because of earnings slowdown or what happens globally?
I think if we don't see meaningful remedial action on the banking system over the next 2-3 months, I think there's every reason to worry about not just our fiscal target, not just our Sensex target, but generally about the stock market. You cannot run an economy this size with credit growth the way it has been for the last couple of years, and with the banking system as moribund. I think we desperately hope that in the next 2 to 3 months we see significant, meaningful remedial action about the banking system's challenges. What the government could do without imperiling the fisc further is open this up to foreign and domestic institutional investors. As we know, DIIs have plenty of money. They'll only be too happy to recapitalize the top public sector banks, and that will get us, I think, back on the path towards having a solid, robust, strong economy.
So banks are a no-no?
I would say, so I think that at the moment,
even private sector consumer facing.
Yeah, so I think barring one or two private sector banks for the last 7 or 8 months, we've told investors be wary of financials. On NBFCs, HFCs, we believe some of the valuations are out of this world. It's just surreal valuations given the underlying economic challenges. On the private sector banks, a couple of them we see some value. But overall, I think the banking system is a quite frightening area at this juncture. When you have SEBI putting off what sounds like a fairly straightforward directive, such as the one that was about to go effective today, when you have something like that getting postponed, you do have to worry about what the state of the financial system is.
Well, the markets have cooled off as well. But take a moment, Saurabh, to thank you for joining us today.
And congratulations again.
Thank you so much. Much appreciate you taking the time out.